morning, everyone. Thank you for joining us, well, early in the morning, not that early already, but I'm absolutely delighted to have a very experienced set of panelists here. And I'd like you, please, to give a short introduction of what you've been doing and what you specialize in first, please.
Sure. Hello, everyone. My name is Bhavik Mehta. I am currently heading the Deputy Research at Century Financials. So, me and my team, we basically look after the investment products, our in-house algorithmic trading app, as well as catering to the big HNI portfolios as far as the US equities are concerned. Yep, that's it.
Hello, everyone. I'm Adele Burton. I am a YouTuber. I talk about crypto, actually, and blockchain. And I've come to the expo, Forex Expo, to learn a bit about Forex, to be honest. I have an eToro account. I do trade on it as well. But Forex, not so much. And that's why I'm here today. But I've been roped in from my knowledge from working for the FCA, the Financial Conduct Authority in London, where I was supervising brokers. So that's where also my experience comes from. And looking forward to having a great session with you all. Thank you.
Hello, everyone. Thank you, first of all, for the invitation. My name is Evdokia. I'm coming from Cyprus, and we cater as a boutique advisory firm to get licenses for relevant individuals and professionals who they want to operate a crypto firm or a Forex trading firm, investment firm, a traditional broker, payment solutions, and I'm happy to share regulatory compliance and issues across the whole world, what is best to do and the trends that we have right now. Thank you very much.
So a real stop shop for brokers then, Evdokia, right? So we're looking today at pioneering the future trajectories, the confluence of innovation, regulation, and Forex trading. And just to start off, I'd like to ask for your opinion. Where is the industry heading in general? If we look both on the regulatory framework, on the technologies available, on the asset classes traded. So Evdokia, ladies first, please. What do you think?
Well, thank you for that. I believe that we are in an era where we have innovation technology and also all the evolution of the industry, including the cryptos, where it is a huge milestone where we see the reputable jurisdictions right now issuing frameworks relevant to regulate the cryptos, including the regulators in Dubai, Abu Dhabi, which they have huge regulations about that. And then we have also MiCA in Europe, which has, for our side, a milestone to regulate the cryptos and the passporting in EU. While we may have also US seeing this regulation coming up. Now, the innovation and all of that, of course, is very important, and it is also evolving in terms of the Forex industry, where we see more products, different products, and it is very interesting to see the AI also being incorporated in all of those online trading.
Thank you very much. Adel, what's your take on that?
So my take is slightly different. Definitely, we're seeing AI in the space. Bots, as they're saying, AI trading bots that can help trade on your behalf. But we're also seeing against the retailers, there's actually a sort of disconnect or a war between retailers and institutional investors, where when retailers tend to invest in a trending thing, the institutions trade against them. And that's how they really make their money against the retailers. The retailers also can gang up on each other against the institutions and try and challenge them. But the institutions always tend to win. You know, the likes of BlackRock, the likes of Citadel. You'll never win against those big ones, the big players, because they have more liquidity, they have more markets, they have more connections. But there's always this war between retailers and institutional investors. AI trading may help with that because it's algorithmic. You can still set your trends, you can set your parameters. But end of the day, don't try and compete with the likes of BlackRock. They're gonna find a way always to buy politicians, find ways to get rid of you and beat you. And that's my personal take on what we're seeing right now.
Okay, David, please.
Just to add to what Adel was saying, see, ultimately, whether it's AI or it's manual, the big money always wins. It's all about who has the maximum liquidity, who has the most influence. Now, getting back to the main topic, as far as the regulations are concerned, I would say we are at a very nascent stage as far as the evolution of AI regulations and not just the financial markets, but the global sectors is concerned. So, just to give a brief statistic, last year we had around 37 bills related to AI that were passed worldwide. This compares to around 5 to 6 bills that were passed in 2017-18. Now, majority of the developed nations, so markets expecting a country like US to take the lead in this particular thing, but so far US has lagged beyond. In fact, it's the European Union that has taken the front show as far as the AI regulations are concerned. So what's happening is the regulators themselves are not understanding what is the power of AI, what is the opportunity. The main thing is what is the risk that is concerned. So he just mentioned about the retail versus the institutional thing. Uh, Financial markets, it's all about leverage. AI has to work better to, I would say, educate, make retail audience more aware of how they are losing, why they are losing.
So, do you believe it will benefit the retail traders in the long run, or do you see it as more of a disadvantage?
I would say the stakeholders need to get together and they need to work in favor of the retail class because if history is any guide, as I've said, big tech, big money, and the regulations always tend to favor the big guys. So I just hope that the regulations are framed in such a way that it benefits the end retail user.
Okay, so Adel, just to go back to your point on BlackRock and retail traders, so to say, could you please elaborate a little bit more as to where does that trend come from and what do you suggest the retail traders should be doing then?
Right. Does anyone remember the stock GameStop? So what happened with GameStop was it had a period in time where it really pumped up and really made some money for retailers. This was actually going against the institutional investors. They challenged the institutional investors and it actually made institutional investors lose money because they were actually shorting GameStop stock. But the retailers ganged up. They saw on Reddit that we're always like they always have us an advantage. Why don't we try and challenge the big boys, the big players in the market, and let's all pump up GameStop? And this happened not too long ago, actually, still in 2021, 2020. And then, so that was one example. And there are many others that I can bring up. Now, how can we prevent this? How can we find peace between the two? Honestly, I don't see any, because when it comes to money, it's a zero-sum game. One person's loss is another person's gain. It's never like you win and I win together. It's always somebody loses in order for somebody to win. And that's why there'll always be a war, and there'll always be a disconnect between retailers and investors, those who have and those who don't have. Regulation has to come up and be more transparent about the costs, the fees that are being you're being charged for. MiFID II and ESMA, for example, Markets and Financial Services Act. So I guess when it comes to the regulation side of things, definitely there will be, I see more regulation coming into this place to make sure that the trades that you are making are in line with you have to pass tests before you're able to trade, like past challenges. Some brokers are making sure you have challenges to complete before you're able to trade so that you don't lose your money. But for the institutional investors, there's not much regulation because when you're a high net worth individual, high net worth institutional, there's no need to regulate. They're almost self-regulated. So there will be a disconnect always.
So just let's take it a step back. The example you have provided, that's not an OTC market, if we look at it, right? We're all operating in FX and CFDs, and that's a slightly different market to operate in. Now, if we look at the regulation and the regulatory framework, back in the day, before the S&P event, before the 2015, majority of brokers were regulated, and they were heavily regulated by the FCA, for example. So when the event happened, I feel like the regulators started slightly pushing the brokers offshore. So do traders, in your opinion, choose a regulated broker? Do they want to be limited by that leverage? Or do they actually choose an unregulated broker that provides them a higher leverage? So how can traders be protected if by choice they're selecting brokers that are unregulated?
Yeah, and that's a good question. I think definitely they choose the unregulated side of things because there's more freedom. Naturally, if you're going to have to file so many compliance and hire a compliance officer, that's an extra cost. Why bother? And traders want the freedom to be able to trade without the hassle of having to provide so much KYC, for example, and so much like how much money you're making, information about how much money you're making, proof of funds. That's just one example. But I'm just saying, compliance. Of course, there's going to be a trend towards unregulation side of things. That's my personal opinion.
Okay.
If I
Yes.
may add on those interesting facts, from the side of the regulation and the retail investors, they are regulated. I'll say that we have seen a lot of jurisdictions offshore, even the most light one, St. Vincent, where they are introducing regulations. I believe that is happening because they realize that they have to protect investors. Now, the retail investor, they take it lightly. They take it in a way that I will make profits, I will withdraw my funds, so I don't really care where my funds are deposited. But in the end of the day, if they really understand that if I trade with an unregulated broker, at any point of time, I may lose all my money because it's an online website which can be shut down and that's it. I cannot complain anywhere. Now, and this is where everything goes to the regulatory side. Of course, we have the higher jurisdictions with high regulation, and it's more reputational also for the companies to have these regulations. But the light jurisdictions, they are growing, and they can have to protect also their side in terms of AML, which is one of the big tackles of many jurisdictions where they are either in grey lists or they are monitored by FATF, and they have to prove themselves that we are doing well. So eventually, we are going to have regulation in all those places. So retail investors will be actually regulated. Now it is down to how much will be regulated.
Okay, very good point. Thank you, Evdokia. And actually, I want to ask you one additional question, but I'll just give some background to the audience. So please correct me if I'm wrong. I think about half a year ago, SVG has asked the brokers to prove that if they want to continue working in St. Vincent and Grenadines, they have to prove that they have the right to continue accepting the traders and prove that they have another jurisdiction that is regulating the business to continue holding that, not license, but registration of the company. Have you seen like a switch from it? Where are the brokers going now? Were there a lot of brokers that didn't have anything except SVG? And what are the jurisdictions that the broker migrating to? And are the traders protected? Because here, obviously, I think we mostly have the traders.
Yeah. We have worked a lot the past months for catering for this specific area. After the SVG announced the new rules, we have seen the category of brokers where they proved that we have a license somewhere else in the world, and they continue also operating their SVG entity. But many companies, they cannot have that. So we have helped many firms either redomicile existing companies from SVG to St. Lucia, Anguilla, or establishing new companies there. The benefit for them is that they can get a legal opinion for offering FX business from that jurisdiction. However, this is a registration. It cannot be considered a license, and they cannot be considered safeguarding client funds because there is no regulation in these places. However, it tick, I will say, the box of I can still offering my business of FX. It's an unregulated space. I can get a banking relationship, which is very difficult nowadays. Another jurisdiction which came up within this last 9 months is the Comoros licenses, where they consider a light regulated license, but it works in terms of I have a brokerage firm. Now, many other more reputable, I would say, already to get in more reputable places, they go to Mauritius, which we highly recommend because it's a place where there are regulations, there are AML provisions, and you're actually having a brokerage firm.
So, in your opinion, and this is for you traders, when you work with the broker, what regulators that are reasonably regulated, that they still have the leverage, would you recommend choosing from?
Well, I will say Mauritius,
Mauritius?
Seychelles, and some of the brokers, they go to Labuan. However, there is
Labuan.
a limit in the leverage.
Okay.
If we are considered third countries right now, if we want to go more into regulation, attract more different kind of territories, then you have to go to Europe.
Okay. So, Bhavik, I know that you're representing probably the oldest broker in the region. And you're regulated, right? So, which regulations do you have? Which jurisdictions do you have? And how can you compete with unregulated brokers that, of course, have a lot less cost of running the business, as Adil has mentioned, with the compliance and so on?
So we are regulated by the DFSA, by ESCA. We also have an offshore entity that is based out of, I think, Malaysia. To answer your second question, how do you compete with all the brokers? I mean, look, in the end, we are living in a world where every broker has to give some sort of value addition to the retail client. Dubai, what's happening is with the growth of the expat population, people come here to make quick money. I mean, let's face it, if you talk about regulation and all that, the retail client is primarily targeting a broker with a very high leverage. What is happening is the amount of strictness that the authorities are showing in Dubai, brokers are waking up to the fact that the business they need to conduct would be more ethical, more genuine. So gone are the times where you can just advertise any blind shit on the paper, talk about any guaranteed returns. This is not the case as far as Dubai is concerned. People are looking for value-added tools, products, services as to how they can actually benefit. If you talk about the end retail investor, they are growing more knowledgeable. I would say you cannot scam them, you cannot bluff them so easily. People are watching what's happening with the markets. People are watching what the other brokers are giving. So it's become a very competitive space. And I would say trust is the main factor that's going to dictate the industry going forward.
Okay, thank you very much. Adil, so what type of instruments are you trading?
I would say I'm more in the crypto side of things. I'm not so much in Forex myself. I feel the crypto has potential because one is decentralized. Two, there's a limited supply, which means it's deflationary, unlike money printing, which is, your money in the bank account is eroding at the rate of inflation. And then there are blockchain projects, dApps, apps that run on blockchain that help with record keeping, supply chain management. I feel putting my time and resources in my investments into things that I feel can build something rather than just make money on the spot is beneficial for me personally. And I talk about that on my podcast.
I was hoping you were going to say that. So if we look into crypto and we look into what has been happening for the past, again, half a year, a lot of things happened in the last half a year. Or we look at autumn, right, when the FCA came in and they said, we're going to regulate this, right? Or, for example, in America, we see Binance being scrutinized. We see BlockFields wanting to launch spot crypto ETFs and really pushing for it. What's your view on crypto, and if it's going to get regulated, is it going to benefit the traders, or will it actually be the end of it, the end of the trading opportunities?
Definitely, I think the BlackRock initiative to launch an ETF, a Bitcoin ETF, is showing that if the institution, when you get to retail level, it's just retail. But when you see institutions pouring their money in, that's where real money really is. It's not the retail money. Retail money is peanuts. It's peanuts. If you compare crypto with the S&P 500, we're really small, really small. But when you get BlackRock, that's a game changer because they're the ones who are pioneers in this space. They're the largest asset manager in the world. If you have BlackRock, a name, it just takes one name, then you get many other names that come in. It's just like capital raising. When you're raising capital for your project, you get one name, Animoca Brands. Oh, you'll get everyone else because you have Animoca on your profile. So when you see Bitcoin, a Bitcoin ETF launched by BlackRock, why are they investing in a decentralized currency that has limited supply, that is deflationary? Well, I think I answered the question already. So I would definitely see a trend towards investing in money into projects rather than just for making a quick buck. And then also apps being built on the project. So like, for example, Polygon and XRP, for example, revolutionizing the way that we send payments faster than banks are sending payments via SWIFT. This is a technology that we can use to our advantage. It doesn't always have to be decentralized. Of course, I don't believe anything is truly decentralized, but it's about the technology itself. So I definitely see a trend towards innovating in this space, and I see definitely institutional money pouring into the cryptocurrency market.
So, as you said it, so it's decentralized now. When it's regulated, can it stay is it even possible for it to stay decentralized?
No, it cannot. Nothing is truly decentralized. Even Bitcoin itself, the whales is defined by somebody who owns a large amount of cryptocurrencies or a large stake in it. The whales control it. If they dump today, we all lose. They can single-handedly control the markets. Elon Musk, for example, can single-handedly Dogecoin, who he invested in and is a proponent of. When you have lots of whales who control and have a large stake in any crypto coin, anything, it's no longer decentralized because as soon as they dump, that you lose value on the markets. Whatever, and you'll never know when they're going to short either. You never know when they're going to short against their position. So again, like there's always going to be a disconnect between those who have and those who don't have. But at least the idea of an ETF Bitcoin being launched shows that they're not just going to just launch this and then close it. There's going to be a long-term process. They're not going to go through all this regulatory framework, high compliance managers, just to have this canceled in a year. They're definitely going to go ahead with it. There's definitely a long-term value for decentralized cryptocurrencies.
Thank you.
May I add? Yeah.
I could see you're like, I'm ready to go.
Well, first of all, Mika, we have 5 categories of digital assets. One is crypto assets, which we consider, of course, decentralized. But one of them are also the digital currencies, where these will be effectively backed by the central banks of each country. So when we have the digital euro and the digital dollar, it will be centralized. And as he said, the one who is actually controlling it is the one who puts the more money. So we have to regulate it also from an AML perspective. We have a lot of wealth currently being in wallets, in Bitcoin, and in many other crypto assets. So when you go to do anything in financial way, then you have to go to the bank to show your source of wealth. And at the current stage, it's very difficult for everyone to prove my source of wealth and not to be considered as a scammer. But you're not a scammer. You trade it and you make a wealth out of it. But going down the line and with the appropriate execution, I would say, of the travel rule, will effectively remove kind of the anonymity and also will be able to trace everything. So effectively, in my view, this becomes centralized and controlled by the governments, by the bank, and everything else. And MiCA, of course, will be replicated, as we have seen with MiFID, to the other reputable jurisdictions. Because effectively, all the, let's say the G20, they want to go through uniformity of rules, so they are aligned between what they do.
Just to add to that
Thank
thing.
you.
See, we need to understand when we talk about decentralized, to what level do we want decentralized? I mean, a couple of months back, we saw what happened with the FTX crypto exchange collapse, right? So we had a huge spillover effect that happened from crypto sell-off to the US equities and even the Forex markets. So we do not want a case where an unregulated market where there are no disclosure norms actually tends to impact a market which is very well regulated. So this is something what the regulators are very keen to address. A retail client or a big institution client who has put in his hard-earned money for a particular regulated market need not be affected by other market which is just operating like a blank casino. That's the main point.
Okay, yeah, thank you. So I think there is pretty much, we've touched on a lot of subjects that has to do with compliance and regulations in general, but I think there are two acronyms we didn't touch, and that's KYC and ML. So specifically with crypto, money laundering is a massive, massive subject. And is it going to still be as attractive trading cryptos if the whole industry is going to be centralized? So I guess that's for you, Adil.
Yes, I want to touch on your point about money laundering. So many cryptocurrency exchanges who launch a cryptocurrency exchange, how they money launder. Let me walk through how they actually money launder. First, the investors who put in the money, they put in the money inside the exchange, showing that there's some kind of existing volume. Then they get their users to invest in their exchange. And then when they do invest, let's say they put some money in Bitcoin, some in Ethereum, some in XRP, Cardano, whatever. Now the existing money is now mixed with the money of the users, you guys, the retailers, right? You're the welcome, you're the product. When you mix users' money with investors' money, now you have money laundered. Because you cannot know which money was laundered, which money was not laundered. It's mixed now, and it's already mixed. And regulators will not be able to find out and trace it unless everything is on the blockchain, which that's the one way that makes everything completely transparent. Every single block, every single time, every single transaction can be actually looked at. And that's one way to counter against money laundering. Because if everything is on the blockchain, then there will always be a unique identifier, which regulators, once they become more averse in the technology, will be able to track each and every transaction to see where the source of wealth of that transaction came from. So one way is definitely the blockchain. And then another way is Binance is actually now disclosing sources of wealth, so source of assets, what is on the balance sheet. So Bitcoin, whatever you put on the balance sheet, assets, property. But they also have to show source of liabilities. So when you're transparent about assets and liabilities, then you're very transparent about what you're holding on the balance sheet. Not all in cryptocurrencies, cryptocurrency exchanges are doing this. They're only showing half the picture, proof of assets and not liabilities. Liabilities is a very important factor because it shows how much debt you have. And yeah, so I would say these two are two ways that we are seeing to counter against money laundering.
Thank you. I think we've covered a lot of very important subjects here, and we have a couple of minutes left. So shall we take some questions from the audience?
Sure.
Yeah. Any questions? Yes, please. Excuse me, could you please give the microphone to the gentleman at the last row? Over there.
Thank you for the talk. Can you shed some light on the central bank digital currencies and how soon do you think they will be ubiquitous? Thank you.
Go. I can.
You want to answer this?
Yes, go ahead.
I love this question. So CBDC, central bank digital currency, is, for context, not to be confused with a cryptocurrency. CBDC is 100% centralized. It is government owned, and it's just basically tokenizing cash into programmable money that can be programmed. It can be sent to your account. It can also be deleted. I can definitely say it is being introduced sooner than we think. Governments always want to maintain an advantage over their people, so they will not mention exactly when they will introduce it, but it's already being ready to be rolled out. They're just making tests to it, making sure it's ready, and I think China is going to be the first to do this, because already they have so much surveillance, AI regulating cameras in their society. It makes total sense to introduce a CBDC where they can control what you own, how you own it, and when you don't own it anymore. So I would say it's already ready.
Would you like to add anything to that?
I agree totally with
Yeah,
you.
thank you. Oh, yeah, you've done perfect. Thank you. Any more questions? Yes, please. Excuse me. Where is? Okay.
Okay, so I know that you said you don't do forex trading, but what are your thoughts on prop firms and the recent issue of my forex funds and all the issues?
That's a very good question. So for those of you who are unaware, there are prop trading firms. It's more of a contest firm. So they allow you to pass through a set of competitions. They limit your trading, how you trade. And then if you pass the contest, you get money to trade for the firm. And it's something, yes, it's something that regulators have been looking into. And the reason why a lot of brokers are also doing it is because they get access to the American market, because they don't have to be regulated for that, technically.
But this is a very good question. What I want to say first, though, is the original prop trading is actually myself trading my money. So there is no reason to regulate myself for trading my money. But the new product of prop trading, as Elena said, about the challenge, about collecting money from the audience for subscription, and actually that's how all those prop trading firms are making their money. Very few will pass the challenge, and not with conditions to use my money to trade, right? So it makes sense, for me at least, to regulate this, because the firms are utilizing client funds. And from one day to another, those client funds may not be there. So if we don't regulate them, then why a forex broker to exist with all those heavy regulations and not everyone become a prop trading firm?
Very good. Thank you, Evdokia. The time is up. Thank you very much. I think it was an amazing panel with a lot of knowledge shared, and I hope it's been useful for you, our lovely attendees. Thank you very much.
Thank you.